So you've got NASDAQ, S&P, and house prices up 50, 100, and 150%. How the millennials and younger are going to get a piece of that pie if the assets that these guys own keep growing? If you want to go and march, fantastic, raise awareness, do your thing, go march, but then when you get home, you've got to switch to something more positive, right? I think your time is better spent understanding AI, understanding what's going to happen. Where is this 83 trillion and whatever the equivalent is in Australia? Where is it currently invested? Because the boomers, they're not going to live forever. So the question that we should be asking is, where is that wealth currently stored? The boomers that have all this money in NASDAQ, S&P, and house prices are slowly watching their assets being debased versus gold and versus Bitcoin. If you start saving in gold and Bitcoin, then in 5, 10, 15, 20 years, you are going to be able to buy these assets. If there was an opportunity to make money from the rise of automobiles, would you have done it? You would have. The same opportunity to make money with the rise of AI is here. Why not make use of it? Welcome to another episode of Money, Markets, and Mayhem. And geez, you'll be watching this at the end of this trading week. I'm recording it on a Tuesday, so Tuesday the 7th of October. You'll be seeing it on a Saturday. I'm sure that no matter where we go from here after this crazy week in markets, everyone is going to be like buzzed and full of adrenaline. Let's hope that your tickers are up and haven't corrected come the end of this week. Things are wild at the moment. We are deep into a melter. High level, I think that this bull market still has some way to run, but there are going to be pullbacks in between. We are not going to see it continue to go crazy like it has this week and the last couple of weeks. There are going to be some steep pullbacks. My base case is that we're going to get a pullback sometime here in October where everything will get hit, and the ones that have run up most probably going to get hit the most. Then I think we're going to rally into the end of the year, into December. It's the nature of flows and things like that. And then I think maybe alts and things will have a run in January, and then maybe a correction at the end of Jan or just after options expiration in Jan. We get some sort of correction again. We may have a run up into March, new all-time highs into maybe middle of the year. And then I think we're going to get a big decline, a big crash, big sell-off. And then let's see what happens there. I do still think that it's more like 96, 98 than it is 99. I think people underappreciate the market that we're in. They underappreciate the industrial rebuild that we're in. I'm going to talk a little bit about that. I'm going to show some slides. But this is the biggest thing. This is the biggest industrial revolution we've ever had. Now, that being said, there is going to be overspending. You're seeing some crazy deals at the moment, and no doubt some companies aren't going to get it right. And there's going to be a lot of excess. There's going to be a lot of waste, and there's going to be a lot of companies that probably go down 90%. Even in a mid next year correction, you might see some of these high flyers go down 90%. So you really have to understand, important warning, you really have to understand, what are you investing in? Are you investing in A grade, top tier, willing to hold through 60, 70, 80% drawdowns because you know that it's going to come back better and stronger? I put things like gold and Bitcoin in that category. Or are you investing in that second tier where it's more like a stock that you really believe in, and even if it goes down 90%, it'll bounce back because it's on the cutting edge of innovation and things like that. Your Amazons, your Teslas, Microsoft, Apple, I don't know. There is a thought out there that some of these Mag 7 names are not going to make it through this industrial revolution that we're going through, right? So how many dead ringer certainties that you would hold through thick and thin are there, right? So, but knowing that is important. And then, are you playing this bull market like I am and trying to find the best opportunities, trying to ride the wave, 2 to 3 month bets, trying to make money while you can, and then take some of those profits and put it into some of your, your hodl names like gold, Bitcoin, etc. what are you doing, right? Like, so I'm all in at the moment. I'm playing. I'm going to talk to you about some of my names, and I'm going to cover everything that I've been looking at this week. And I'm taking a little bit of this inspiration from Jordy Visser, who does it this way. But before I get into that, for those of you who have not joined the 10K challenge, please sign up for it now. You can see it. This is the web address here, markdepaola.com.au. It's my name. Subscribe, click on the link, subscribe, join the 10K challenge. There is nearly 1,000 of you that are following this challenge along. Just this week, the account we've gone from 10,000 to 25,000. So we are up 150%. So the goal at the start of the challenge was to 10x the 10K and turn it into 100. We've now doubled and a halved it. All right, so we're up 150%. We now only need a 4x to get to that goal. But here's what I want to do. I want to turn the challenge on its head. What I want to do is I want to start getting you guys at home involved in this challenge. It's going to be a crazy next 3 to 6 months in markets. So let's all play along at home. What I want you to do is screenshot me your starting balance of wherever you are now or wherever you were 2 weeks ago or 3 weeks ago when you started your account. Screenshot me that starting balance. You have to have started the account, I don't know, in the last 3 months. I think that's fair, right? Anyone who started their account in the last 3 months, send me a screenshot of your starting amounts and then send me a screenshot of where you are now. And at the end of each week, reply to my updates, because I'm going to create a leaderboard. Reply to my updates with your starting amount and where you are at the end of each week, okay? And we're going to run a leaderboard. Now, people are going to ask, what app, what platform, what account should I use to get involved? The answer is use any platform that you feel comfortable with, okay? Use any platform that you feel comfortable with. You can put a search into ChatGPT and ask it, for trading options or for trading stocks, US stocks, because that's what we're mainly playing with here. What's the best trading accounts? And it'll tell you. I know that the most popular at the moment are probably Interactive Brokers. I know a lot of people are using that, okay? So if you want to use that one. But yeah, just get an account, get started, and let's get those trades on. And send me your account tallies in percentage terms or in dollar terms at the end of each week, and I will create a leaderboard that I will send out to all the subscribers at the end of each week. Now, here's what I'm going to do. If we get 25 people that are playing along with the challenge, I'm gonna offer the winner 4 1-hour coaching calls where you can ask me or we can talk about anything in the world of finance, macro, putting on trades, how to do options, etc. If we get 50 people on the leaderboard playing along at home, I'm going to give 8 weeks, 1 hour each. And if we get 100, then I'll come up with something a little bit more special, a grand prize if we can get 100 people playing along at home. So 25 people on the leaderboard, and first prize is going to win 4 hours coaching, 1 each week. If we get 50, it'll be 8 hours, 1 hour each week. And yeah, we can basically go from there. We probably need to come up with a finish line. And so I'm thinking it'll either be the end of Jan or the end of March will be the finish line for the challenge. All right. And so we'll see at that point who is leading the leaderboard. All right. So get on there. We've got nearly 1,000 subscribers that are following the daily updates. So we should be able to get 25 to 50. And please feel free to send this around to all your family, friends, etc. Let's get them involved in the challenge as well. All right. Now let's get into it. Let's get into the most important things that I've been looking at this week. Jordy Visser does this amazingly well. He's no fluff. He's all legend. I mean, seriously, the guy's been around for ages, and he's killed it. He's killed it for a long time, and he is giving some of the most amazing teaching on how he goes about his investment process. And now with AI, a one-man band now has the ability to research and invest like a big hedge fund. Only we get to do it with an advantage. We're so much quicker and more nimble, and we can also invest in smaller cap things that these larger funds cannot invest in. So I think the next couple of years, I don't know how long it's going to last, but before these big guys get involved in using ChatGPT to research and to be dynamic, and AI and Grok and whatever else, we've got an advantage. We've got an information arbitrage advantage where I believe we can front run the transition and make shitloads of cash. All right. So get involved. Just on that, Grok. I've been using Grok lately, and it is excellent, especially for looking up company information, forward price to sales ratios, PE ratios, etc. Grok has been amazing at lately. So anyway, let's get into it. First thing that I've been looking at. So this is interesting. This is from the old Wall Street financial guys. This is a global FMS investor sentiment survey. Now, it's risen to a 7-month high, but the sentiment still hasn't taken out the highs of the Trump election, and it hasn't taken out the highs of the blue wave. It hasn't taken out the highs of QE. It hasn't taken out the highs of BRICS. There is still room, right? There is still room, and there are a lot of people on Wall Street that still are only just starting to get positive on this market, right? Like, it's crazy, yes, but there's people that are only starting to get positive on this market. What's going to happen is as the market rips and the S&P and all these benchmark indexes start to go up, all these people that have had, all these big funds that have had cash on the sidelines, they're going to need to put money to work because they cannot get to the ends of the year and underperform these benchmarks, or people are going to pull their funds from them, right? So as the market goes up more and more, these guys are going to be more inclined to come into the market. And, that is the kind of recipe that fuels your blow off tops, right? So, wild times, but it looks like the Wall Street guys have been last to join in on this party. This here is from Fundstrat. So Mark Newton is a technician that I follow from Fundstrat, and his framework for the market at the moment, following the Elliott wave forecast, is that we see the S&P rip up to close to 6.8. Now we're getting close now. I think we're 6.775 or something like that. So we are getting close to this point 5, and that this correction could be in play with a deeper correction as well, right? Now, we haven't got the dates on here, but that's probably October, November, December, right? So there is a possibility that we get that deeper correction, which is aligning with my October-ish forecast, and then the market continues on. So, just be careful out there. Don't get too ahead of your skis. And if you are all in, balls to the wall, just make sure that you have a decent trading process, that if things do start to top out or we do start to get a correction, that you've got a process in place to, take some profits if you are short-term trading. All right. Everyone is probably watching Bitcoin as well. And you can see that October is historically one of the strongest months for Bitcoin, averaging a 21% return. So will we see another October, right? This is October here. And basically every single month has been green except for 2 in Bitcoin's history. But it's the size of those increases, 10%, 25, 5, 39, 27, 10. Right? October is generally a big month for Bitcoin. DXY is following the same pattern as 2017. So this is one that I'm watching. Too much dollar strength can be dangerous. But as we move into quad 2 and quad 1 in the US, which is rising growth and steady or declining inflation, and quad 2 is rising growth and rising inflation. On the monthly quads from Hedgeye, we're moving into a quad 2, right? So in a quad 2, you can see some dollar strength and still see asset prices rise. But you'll see that November is a quad 3. So that is when growth is decelerating and inflation is rising. And then December is a quad 4, right? And that is when inflation is deflating and growth is deflating. So I do think we're going to have a strong first quarter next year, but I do think there's also going to be a correction this year. So whether that happens in October, whether that happens in November, December, we have to stay alert if we're playing all out right here, right now. And that is what I'm trying to get the edge over. And that is probably what I will try and signal in the 10K challenge, right? If I start taking off some risk, then I'm worried that we might get a deeper correction. Beyond the technicals, I'm having this conversation, and we've had it a lot on the Unemployable podcast. We keep talking about it. I probably think we don't talk about it enough. I still don't think people are taking AI seriously. The people I work with, I'm always on their backs to get them to use AI. I'm using it every day, all day. Everything I do, I'm basically running through AI, and I'm doing it manually. I think in future, it's going to be automated. It's going to run through our apps in the background, automated, right? All of our apps, all of our programs, all of our software, everything that we do is going to be run through AI. And what worries me is that so many of the general population, I think still aren't using AI. And if anyone out there thinks that they're going to be able to have a job in the future without using AI, I think you are mistaken. I think AI is literally going to be, it's going to be a little bit like horses and automobiles. I remember reading and seeing anecdotal stories when cars started to replace horses in the early 1900s. People would say, why would I want a car? I have a horse, right? Because the speeds of the cars at the time weren't amazing, right? Probably some horses could go faster than cars, and people are like, why would I want to do that? But you can see over time, the amount of people using automobiles and the amount of people using horses, it completely diverges, right? And so I think at the moment, AI is exactly going to be like horses and automobiles. You basically aren't going to be able to work unless you can use AI, right? And so my thing is, why wait until it's automated into your apps? Understand it now so that you can have the edge over other people in the marketplace, because those who can use AI best and get the most power out of it, I think are the ones going to be the advantage. And why shouldn't we be early adopters? Why shouldn't we be? If there was an opportunity to make money from the rise of automobiles, would you have done it? You would have. The same opportunity to make money with the rise of AI is here, and I'll touch on it more as we go through the rest of this pod. It is here. Why not make use of it, right? Make use of it if you can. So this is what we tend to talk about, right? In one way, shape, or another, our media, UK media, people going to marches, everyone seems to be angry and upset about the wealth inequality. And it's true. There is a crazy wealth inequality where the boomers are controlling so much more of the wealth than their parents did at the same age. And so the ones who get screwed are the silent gen, but mainly like the millennials and the Gen Z, right? They're the ones that are copying it. And so that's fueling this divisiveness. That's fueling this divide. That's fueling this angst over immigration. That is fueling all of that. If you want to go and march, fantastic, right? Fantastic. Raise awareness, do your thing, go march. But then when you get home, you've got to switch to something more positive, right? I think your time is better spent understanding AI, understanding what's going to happen. Where is this 83 trillion and whatever the equivalent is in Australia? Where is it currently invested? Because the boomers, and touch wood, but they're not going to live forever. And that goes for my parents as well, right? They are not going to live forever, and they are going to have to transfer that wealth somewhere. So the question that we should be asking is, where is that wealth currently stored? Now, I used Grok to do a little bit of research into this 83 trillion to work out where it's stored. And not exact, but you can basically work out roughly that 32% of that money is stored in homes, 40% of it is in stocks, 22% of it is in cash and bonds, and 6% is alternative investments. So I don't know what that is. Could be gold, could be private equity, could be all kinds of things. What I'm here today to tell you is that the money that is in homes, stocks, and bonds, you can get access to. You can get access to now. Because if you understand this second chart, which I'm about to show you, you'll know that you don't have to wait for boomers to die to hand over that wealth. You can start investing it in things at the moment that are outperforming homes, outperforming stocks, and outperforming bonds and cash, right? And that's the next slide I'm going to show you. And this is an important slide, and I want to go slowly and explain it and make sure that everybody at home understands it and gets it. You've got a bunch of different lines on this chart. The first one is the NASDAQ. The NASDAQ since COVID is up 154%. So you're probably thinking, yep, the boomers can probably control most of those gains. And you're probably right. You're probably right. S&P 500 is up 96% since COVID. You're probably thinking as well, yep, Mark, I don't have stocks, but the boomers sure do. You showed me before, and they're controlling most of that gain. And you're right. So the S&P and the NASDAQ, which are probably two of the most widely held things in pension funds, are up this crazy amount. How are we going to catch up if these things are going up so crazy? I can tell you what this is. This Standard & Poor's, this is house prices. So house prices are up 55% since COVID. So you've got NASDAQ, S&P, and house prices up 50, 100, and 150%. How the fuck are millennials and younger going to get a piece of that pie if the assets that these guys own keep growing? It's hard, isn't it? It's hard, but let me show you something. What Luke has done, what Luke Groman has done with this chart is he's charted NASDAQ. Let's go through them all. You've got S&P, you've got house prices up 56%, you've got S&P up 96.5%, and you've got NASDAQ up 154%. Then what Luke has done is he's charted these versus gold and versus Bitcoin. Now here's where it gets interesting. The S&P versus gold since COVID is down 17.19%. So if you were saving in gold and you didn't buy S&P, you just bought gold, you would have outperformed because the S&P is down 17% versus gold. House prices versus gold are down 33%. So instead of buying a house, instead of saving for a house, instead of saving for S&P, if you took the money that you had and put it into gold, it has outperformed. S&P versus Bitcoin is down 81%, right? So Bitcoin has outperformed. House prices versus Bitcoin down 85%. So here's the point. The boomers have all their money in house prices, S&P, and NASDAQ. The only one that outperformed gold was the NASDAQ, up 7.2%. All house prices S&P did not outperform gold. Now let's look versus Bitcoin. NASDAQ is 75% down versus Bitcoin. So Bitcoin has outperformed all of these assets by a mile, even the one asset that's up 154%. What does this tell you in simple terms? It tells you that the boomers that have all this money in NASDAQ, S&P, and house prices are slowly watching their assets being debased versus gold and versus Bitcoin. So then what does that tell you? It tells you that if you start saving in gold and Bitcoin, that in 5, 10, 15, 20 years, you are going to be able to buy these assets off the boomers at pennies on the dollar, right? I'm sure you guys have all seen that little infographic that shows how many Bitcoin it cost to buy a house. And in 2008, it cost like how many thousand? And in 2017, it cost like hundreds. And now, like today, it costs like 6. The point is that if you start saving in gold and Bitcoin, that in 5, 10, 15, 20 years, you will be able to buy all of these assets that are causing the angst at the moment that you don't have. The house, the stocks, etc. You'll be able to buy them at pennies on the dollar off the boomers and off the Gen Xers if you store your money in the right thing. Gold and Bitcoin, okay? Gold and Bitcoin. Don't take my advice for it, but take this chart, look into it, understand it, deconstruct it, and go from there. If you understand this, you'll understand that you never need to attend a march again, that you have all of the tools that you need for a peaceful protest that not only gets heard, you don't even have to care if it gets heard, you have the tools for a peaceful protest that you can win, okay? That you can win. Aussie house prices, right? This one I thought was incredible. So home value index moved up 0.9% in September. So house prices keep getting more expensive. And they are basically projecting a 9.4% annualized pace in house prices. Yeah, you can go out and save for a house. You can go out there and you can buy a house, but you're only getting a 9% annualized growth rate before all the taxes have been taken out. The amount of money that the governments are putting into the system each year is 8%, plus inflation at 2 to 3, it's 11%. Your hurdle rate is 11%, right? Your hurdle rate is 11%, so you need to be able to outperform that. So I'm making the case here today that even though the thing that is causing most angst, house prices, are going up and becoming unaffordable, that if we're smart about how to bridge the gap, we don't need to worry. Everybody has been watching gold lately, flying higher. And what this chart basically shows is that gold has been leading Bitcoin, all right? And that this crossover shows a rotation where it looks like Bitcoin is the blue line, Bitcoin is set to outperform gold. So we're moving into that part of the cycle where Bitcoin is set to outperform gold if this keeps up. Here is another chart from GMI, Raoul Pal, Global Macro Investor, and it basically shows that since the start of 2024, that gold has led Bitcoin on a 200-day lag. On a 200-day lead, Bitcoin is lagging by 200 days. So gold, that is what it has done. And so if Bitcoin follows the trajectory of gold, we could see prices in 2026 over 200K. Not a prediction, but if the correlations keep up, that's where we are in the cycle. ISM. So this is from Fundstrat, this graph. This is one of the things that I think a lot of people don't understand. And this is why I think the bubble calls and everything is too expensive, we're in a bubble, this is crazy. This is why I think those calls are wrong. Because anything below 50 on a ISM manufacturing is actually contractionary territory. We have been below 50 for the last 32 months. How can you have a bubble if the economy, the main street economy and manufacturing hasn't come with it? You can see before the COVID crash, ISM got to 60. You can see after the COVID crash, ISM got to 60. We're still below 50, right? I believe that for us to be getting into bubble territory, end of the bull market, and going into a bear market, you need to see the ISM a little bit higher, much higher than what it is now. And what will cause the ISM to start to go higher is when manufacturing confidence starts to pick up, and that is usually correlated with commodities prices starting to rise, and they are starting to participate. Commodities are starting to participate in the everything bull market at the moment. So, things like copper, silver, altcoins, they're all correlated to the ISM going higher. Usually, the peak out in the ISM also correlates with a top in Bitcoin. Okay, so this is why I still think the bull market has room to run. And so far, we're almost 100% priced in 2 more interest rate cuts from the Fed, right? So that's going to kick the ISM up higher as well. We spoke about the 10K challenge before. This is a snapshot of my account. We've taken, since we started in July, like July 9th, the account's gone from 10,000 to 25,000, so we're up 150%. We only need a 4x from here. We only need a 4x from here to get to 100,000, and that would be a 10x. That would be the 10x 10K challenge. So I'm calling all of you to join in on that challenge from wherever you are or wherever you started in the last 3 months. Let's get involved. Let's get learning. Doesn't matter if you start with $500, $1,000. The winner is the one that gets the most percentage gain, not the one that ends up with the most money. Quick snapshot of our holdings, my holdings. So you've got this Coinbase Leap, March expiry, up 175%. You got the Tesla. We only added the Tesla last Friday, I think it was. I think I caught an intraday sell-off. I think it was last Friday. That's up 40% and 42% on those calls there. They are my biggest, for what it's worth, in another account, they are my biggest options position. We spoke about these long-dated leaps for IBIT, up 38 and 67%. They're into January 2027. So we're going to let them ride until I think we've gotten to the top of the Bitcoin market. These are going to be the barometer. When I sell these, this is when I'm signaling that I think we're at the top of the Bitcoin market. 2 weeks ago, I put on an IBIT trade in my other account, and it was for December this year, expiry. And that is up 105% in 2 weeks, all right, short term. And I'm about to roll those into price further out because I'm now in the money with those calls. Also, Coin, I think I'm about to roll the Coin 400s into 500s for a little bit more VIG, a little bit more convexity. Further out the money, the options can move a little bit more as the probabilities get priced in that we can reach that price. And then the other new one that I added recently, I had IREN. Oh my God, guys, I had like a $50,000 US position in IREN, and in like 3 trading days, I sold it to like $6,000 position because I thought it was getting overhyped, and I put it into various different things like EQT and other things. Anyway, if I had kept that, I would have been up 100% in like 4 days because IREN has just gone ballistic. I think it was up 20% today. So spastic market at the moment. But EQT, I think, is one that will benefit from the energy demands of AI, and we might talk about that a little bit further in a second. Bitcoin seasonality. So like this chart basically tells you that all of Bitcoin's gains from when Bitcoin started going, like all Bitcoin's gains usually come Feb, March, and October, November, right? So this is the season to be playing because historically all Bitcoin's gains come in Feb, March, and October, November. Volatility is at all-time lows, right? You can see Bollinger Bands, the width of Bollinger Bands have contracted, which tells me that volatility is at all-time lows. This is why the IBIT options at the moment, I think, are a good opportunity. You know, choose your expiry, choose your strike. I think they're a great opportunity because volatility has room to expand into these cycle peaks, right? It might not go all the way up because it looks like it's declining over time as the asset gets more adopted, but we're still at lows and we've got room. Another chart, thanks to GMI, Raoul Pal, legend. You know, guys, if you ever get to the point where you can make a living out of this, I suggest that you subscribe to this guy's research because you'll pay for it in one trade, literally. But you can basically see, this is what I was saying before, ISM, Bitcoin, peak. ISM still has plenty of room to run. I've been using Grok AI lately, and I love that Jordi Visser has been talking about this because I've been using it. You know, before he even started explaining this, this is how I was using it. I was putting transcripts into Grok, putting transcripts into ChatGPT. Started using Grok more, and I've basically been asking it, outline the key themes from this transcript. What is the market not seeing? Where is the demand being understated? Where are the supply bottlenecks going to be? And I've basically had Grok synthesize all this data from these transcripts and give me the companies that are most well positioned to benefit. And I'm not giving trade recommendations here, but I'm showing you the watch list of names. I'm showing you this is how I'm making my trading decisions, right? This is how I'm making my trading decisions. I'm researching the names through AI. Then I'm looking at their volatility characteristics and profiles. I'm looking at their oversold readings. I'm looking at their technicals, and I'm trying to, for my trading part of my portfolio, I'm trying to move my money around based on what's cheap or hasn't been priced in yet. I've still got my hodl stacks, and I'll talk to you about that in a minute, but I'm trying to make some big outsized returns, and these are the names that I'm researching at the moment. So in the semiconductor design manufacturing space, semiconductor equipment and testing, semiconductor packaging. Some of my favorites here, AMD just went up 20-30% today. If you were holding that, my Intel options are up 700% since I put those on. Some of the others that I'm really looking at, I'm looking deeply into data center infrastructure and energy at the moment. This is probably where I'm spending most of my time, but you can see all these different names that stand to benefit from this industrial revolution, right? The build out that is happening. Energy, equipment and industrials, energy storage, cryptocurrency, miners, big story here, and cryptocurrency, etc. So these are the names I'm looking at, guys. These are the names I'm looking at. Before we finish up, I might give you guys a quick snapshot for those who have stayed until the end, a quick understanding of how I'm currently positioned, how bullish I am or otherwise. So my options position, which was like 10% of my portfolio, has ballooned out to like 37% of my portfolio just through capital appreciation in the options I'm holding. Stocks is about 31%, crypto is 24%, and I'm sitting in about 6 or 7% cash. And I'm looking to put all that cash to work at the moment and trade in and out of things as we get corrections. My biggest position from the hodl stack is still Bitcoin, followed by Woodside. Honestly, that hasn't been a very good performer. I'm looking at it. I still think it's safe and it gives me an 8% yield, and I'm at like 8% plus an 8% yield, 16%. I'm still outperforming inflation and debasement, but I'm looking potentially at opportunities to deploy some of that. We'll see. Tesla is so then you've got Bitcoin, Woodside, Metaplanet, which has been a dog. I'm down 50% on that, but I'm going to hold it. Tesla is now my biggest options position, followed by Intel, followed by Coin, followed by IBIT, followed by my Doge, and then all under 10%. You've got some other names that I'm in: EQT, Sui, Freeport, McMoran, Solana, IRN, Lumen, Wolf, etc. So there's some of my biggest positions. Yeah, you have to have a profile that works for you. What else, guys? I think that's it. I think we're going to wrap it up there. I think we've covered heaps. I've given you guys a bunch to kind of look into. As always, ask questions, put the questions in the comments. I hope each of you can get involved in the 10K challenge. I'm getting more and more emails of people asking how they can get involved. Set up your account, send the screenshots. I'll throw the leaderboard at you guys each and every week. Let's go at it. Let's get after it and enjoy these crazy markets. Hopefully we can all make some money. All right, guys, take it easy.